Let's now solve question number 6C from our May 2024 CA Intermediate Examination. This question is on branch accounting. Smart Limited is an Indian company and has its branch at New York. The following balances in respect of Smart Limited's USA branch is made available. This is like trial balance but not exactly trial balance. Using this data, what do they want us to do? Come to the last line of the question. You are required to show how will it be reflected in the books of head office in the form of trial balance. You don't have to draw trading P&L balance sheet of that foreign operations which is to be included in the head office books. You only need to redraft their trial balance. And when you're redrafting their trial balance, remember that this is an integral foreign operation. Whenever it is an integral foreign operation and we are redrafting, we take the data from the trial balance which is in foreign currency, convert it to reporting or home currency. For expenses and incomes, we'll apply average rate. For monetary items, we'll apply closing rate. For asset, we apply the historical cost rate if it is not revalued. If it is taken at fair value, then that whatever the date on which fair value is considered, that is revaluation, that rate will be considered. This question also has a beautiful adjustment on the topic of inventory. They have given some data with regard to NRV of the inventory. So we need to take the inventory outside the trial balance. Check the cost, check the NRV, check whichever is less, and then consider it back into our trial balance. Can we start? To begin with, we have debit balances. Debit balances expenditure excluding depreciation is 103095. Depreciation will record it at the transaction date rate because depreciation is applied as a percentage of asset which is a transaction date which is not on the closing rate. So though depreciation is an expense, don't apply average rate for depreciation. Let me start with our expense excluding depreciation. I would write expense excluding depreciation which is available in dollars as 103095. In dollars I'll write 103095. Later when I get to know the closing rate, I'll multiply it and then convert it to. Right now I am not aware of rupees, so I've kept it pending. Okay, right. After expenditure, next item that I have is cash and bank balances. Monetary item, cash and bank balance 2175. I'll convert it at closing rate. Expenditure I'm supposed to apply average rate. I don't know average rate, so I'll write the heading and keep it waiting. Cash and bank balance $2175. I have to apply closing rate. I don't know closing rate, so I'll keep it waiting. After that, we have debtors. Debtors is a monetary item. It has to be translated at what rate? Closing rate. I'll write debtors of 7365 and I'll write closing rate here and wait for it to be converted into Indian rupees later. Then I have with me fixed assets. This is gross without charging depreciation. So I would write this as debit 34,200. I'll also charge depreciation at 20%. Depreciation also will be converted at the rate which will be applied on fixed asset. So that gross of 34,200 is inner column item because it is before depreciation. You agree with me? How much is depreciation on this? 34,200 into 20%. How much do we get? 6,840. And asset should be recorded at 34,200 minus 20%. Minus 20% depreciation. Or I can do 34,200 minus 6,840. Either ways it is fine. And for this I am going to apply the transaction date rate. The rate prevailing on the date when the fixed asset was purchased. Got that? After this fixed asset, then I have with me inventory. Inventory P, inventory Q, I would take it. These are non-monetary items. I would record them at the historical rate, but I have a beautiful adjustment awaiting here. Adjustment number 4, adjustment number 5. Stock item P, stock item Q. So there is a problem. So what I would do right now is, I don't worry about it right now. I'll write inventory P, inventory Q, and I will not do anything. Later when I read the adjustment, I will adjust it and then bring them into trial balance. For now, because this inventory P and Q has adjustment, I will not read it right now. I am not going to break the order of the problem. Because these two have adjustment, I have kept them waiting. Shall I do that? Come to the next item. Then we have credit balances. Income 1,32,000. Income of 1,32,000. I am going to apply what rate? Average rate, which I don't know yet. Later when I read the question, I'll get to know, then I'll write it. What do I do after income? Next I have creditor. Creditor is a liability And this liability is again monetary item. I need to apply closing rate. I'll write 15,570 closing rate, which I'll get to know later. Last thing that I have in my trial balance is head office control account. Head office would have maintained branch account, branch would have maintained head office account. For every transaction that head office and branch will denote, both of them make the entries. So there is data available in head office books against the branch account. Similarly, branch would have the data available against head office account. Both should match. If it doesn't match, we need to do reconciliation and rectification. With there being a difference, we cannot go progress or further. Now I'm assuming that there are no rectifications required because no errors have been mentioned. So for head office control account balance of $5,820, I will not apply any rate. Against that balance, in head office books, there will be branch balance. I would write that straight. So we are going to write the actual value, which I don't know right now. It will be later made available to us in the question and then I would write it. Understood this? After head office control account, there we go to the adjustments. Average rate is 56. So we'll write average rate for our expenditure 56 and I'll write average rate for income 50. Those are the only two items having average rate. Sir, shall we multiply? Let's do it all at the end. Right now we'll try to figure out and then identify the rates. Shall we? Then fixed asset should be recorded at 55. But they have not mentioned explicitly, not just fixed assets, but the depreciation on fixed assets also should be recorded at 55. So let me write fixed assets at 55. So is the depreciation on that fixed assets at 50. Did everyone get this? What do I have after that? After that, closing exchange rate is 58. So 58 closing exchange rate is relevant against monetary items. So the monetary item that we have here is cash and bank. There I'll apply 58. Then against debtors I'll apply 58. And we have creditors. Here also I'll apply 58. Understood this? Will I apply 58 on inventory? Yes, if it is NRV. Yes, if it is. But I don't know that yet. Okay, let's do that now. Stock item P Limited is valued at cost of dollars 5,250. Purchased when the exchange rate was 56.50. NRV is 2,85,000. So we need to take cost or NRV, whichever is less. We know $5,250 is cost when the rate is 56.5. If you do 5,250 into 56.5, we'll get the cost. Let me write here cost. In dollars, it is 5,250. Exchange rate is 56.5. 5,250 into 56.5 will give us 2,96,625. This needs to be compared with net realizable value. Net realizable value is 2,85,000. Tell me whichever is less is 2,85,000 and 2,85,000 we don't know the rate. But remember in my trial balance when I write inventory stock P, I will write it on the debit side at 2,85,000 what I just figured out. Whichever is less. But the same item in the trial balance is there at 5,250. So I would write inventory dollars 5,250, but in rupees I am writing 2,85,000. In the conversion rate, I'll write that I've done one detailed working note, and whatever is there in that working note will come here. I've done working note, and the data from working note has come into this table of 2,85,000. Do you understand? Sir, do I have to write the closing rate here and then identify the dollar value and rate? Not required. See, this is not required. This is what we will consider in preparation of financial statements. I hope you understood. Next, similar adjustment is there for inventory Q. It is carried at NRV of USD 1035. See, for inventory P, they told NRV in Indian rupees. For inventory Q, they're telling USD. USD 1035. I should apply the conversion rate and convert it to Indian rupees. Do you get it? How much is NRV? 1035. So I will write my NRV for inventory Q as $1,035. So exchange rate, I'll apply the closing exchange rate. What is closing exchange rate? Closing rate is 58. If I apply 58, 1035 into 58 is how much? 60,030. And the cost was, they've told us that the cost is how much? 1065, rate 53. I'll write 1065 to be the dollar rate and exchange rate is 53. 1065 into 53 will get rupee rate. You tell me cost or NRV, whichever is less is coming to cost of 56,445. The trial balance would have recorded 1065 in dollars. In rupees, I'll record 56,445, which is actually exact conversion. So let me write here inventory P in dollars, it is 1035. We've done detailed working note for this item. And if you're talking about the Indian rupee value, it is 56,445. And I've read the question in the same order in which the question is given. One last adjustment is left in the question. When I read this, I get to know that branch control account in head office books is 266, 265. Head office control account in branch books was, what was that value? It was this 5,820. I've written that 5,820, but I didn't write conversion rate. Now I'll write 266, 265, what is given in the question. All that I need to do is convert, multiply, and then take the total. Trial balance should not tally. We have to take the difference. If this is an integral operation, we transfer it to P&L. But in this question, is it integral or non-integral? If it is non-integral, FCTR, foreign currency translation reserve. This is integral operation. We'll transfer the difference to P&L through foreign exchange difference account, because integral foreign operation as per accounting standard 11 should be treated like foreign operation or foreign transaction. Foreign currency transactions and integral foreign operations are no different as per accounting standard 11. Now come on, take your calculator, multiply 103095 to 56. 57 lakh 73 320. 2175 into 58. Which one? 5520. That is what is given in trial balance. I've written the same thing. That is only for disclosure. Oh, 5520. Should we take 5250? Ah, it is 5520. Okay. 5520. Then it becomes 3,11,880. However, yeah, sorry. It is 5520, which comes to 3,11,880. But it is 2,85,000. This is 5520. Correct? Very good. How much is the total here? 7,365 into 58. 4,27,170. 27,360 into 55. 6,840 into 55. Very good. Then 1,32,000 into 56. 15,570 into 58. Take the total on the credit. Take the total on the debit. Total on the credit side is more than debit by 12,240. And this 12,240 is foreign exchange difference, which will be transferred to P&L account because this is integral foreign operation. On the other hand, if it was non-integral, it would have been transferred to foreign currency translation reserve account. Understood?